Mr. Saugata Gupta, who is the Managing Director and CEO of Marico Limited, who is joining us now. Welcome to NDTV Profit, Mr. Gupta. My first question to you is that this big boost in consumption, how are you reading it, and how will it benefit Marico as well as the entire space of FMCG?
I think this is an extremely bold move from the government and extremely pragmatic. And if you really look at it, there has been some consumption stress, especially in the urban middle class over the last 1 or 2 years. It has been a function of recent food inflation, also the fact that the wages had not increased significantly and they hadn't got tax breaks. I think it's extremely good because it will not only lift sentiment, but you will have sheer amount of money which is there. If you look at the number of people who have got, a significant savings now, and this will translate into definitely higher consumption, not only in FMCG but also in retail, QSR, apparels, two-wheelers, auto and other sectors, and a lot of them will benefit, and that consumption will drive with more demand and therefore more investment in these sectors.
Right, Mr. Gupta, moving on to Marico's earnings, it was a very good set of numbers considering that the demand environment has been, on a slowdown. I want to understand as to how the quarter has gone by as per your internal expectations, and what are the expectations going ahead? How will FY25 end?
I think it is one of the highest revenue growth and volume growth in the last 10-12 quarters which we have delivered. And it has been on the fact that we have been resilient with respect to input costs in the core. Our diversified portfolio continues to do extremely well, whether it's the digital and the food business. And the fact that our international business also has been extremely resilient and has been delivering, double-digit constant currency growth in most of the countries where we are present in. We believe that actually the fact that our urban contribution is 70% of our total portfolio, and especially the high growth component is extremely urban, almost 100% urban, the food and digital brands. This current budget and the lift in consumption will further help in our growth story. And therefore, we are confident that we will be able to deliver top quartile volume growth as well as, delivering double-digit revenue growth over the next couple of quarters. There could be transient margin pressures, but we believe that we are towards the fag end of the inflation cycle as far as copra is concerned.
Right. Mr. Gupta, in terms of the price hikes taken, there have been price hikes taken this quarter also. I want to understand the overall picture as to how much of a price hikes have been taken overall till now in 9 months FY25, and going ahead Q4, what is the range of price hikes that you're expecting?
So if you look at today, the India number, which was 17% top line against the 6%, so around 11% has been a combination of pricing and mix. So we believe there will be, we have taken some price hikes this, as we close the quarter, there'll be 1 or 2% extra we will get through pricing over the next Q4. But yes, I guess things will soften a little bit towards the second half of the next financial year.
Okay. One more thing, Mr. Gupta, a lot of these FMCG companies have come out and said that smaller packs are being sold more right now because, there was less money in the hands of a common man. But now we are seeing that, there will be consumption boost going ahead also. Till now, I was asking that question in a manner that, small packs have been growing, and that's a trend being observed in FMCG. But overall, now that we'll have more money in the hands of a common man, do you think that trend will see a reversal, or do you expect that trend to continue?
So there had been a combination of things that was happening. One was obviously people downgrading from large packs to small packs. People were downgrading from large brands to smaller brands, which were less expensive. And therefore, if you notice in the last 1 or 2 years, smaller brands which had almost gone out of action during COVID, they came back in a big way. And thirdly, there has been a titration of consumption. So I think there would be some reversal that we will see. But one thing that will happen is that we believe in packaged foods and BPC categories, penetration increasing, and people also, consumers, also driving consumption and also, trying out new things, because that's what people want to do. It's not just about trading up of existing categories which are there, but also about, penetration of some of the new categories.
Right. Mr. Gupta, with respect to, the segmental performance, the value-added hair oils have seen yet another weaker quarter. What's the kind of expectation going ahead? Do you see an improvement there? Because I believe that the margins there will be better. and hence what is the kind of margin uptake do you see, because you've also mentioned that that has now bottomed out. So what are your expectations going ahead, and will it lead to an uptick in margins?
So I think value-added hair oils has been disappointing, and I think we are slowly getting it right compared to last quarter. This quarter was better. Having said that, I think what has happened in the value-added hair oils is a combination of consumption where people have downgraded, as well as some competitive action at the bottom of pyramid has led to some kind of a little bit of a commoditization of the category, where a lot of other players are not spending in ATL and driving category growth. I think since last quarter we have done a reversal in our strategy to say that we are just not happy with the share of voice. We'll over-invest and drive the mid and the premium part of the category. And I think this budget has come at the great time, because that will now drive that growth, and we always believe in above the line investment driven long-term equity led growth, as opposed to doing tactical trade scheme related growth, which has been happening at the bottom of the pyramid. And we are confident that we will turn the corner and getting into positive territory as far as value added hair oil is concerned over the next few quarters.
Right, and in terms of margins, this quarter, I believe it's because of the inflationary pressure that margins have come down to around 19%. When do you expect them to bounce back to the normative range of margins?
So I think we will try to deliver a 20% annualized. Obviously, the first quarter will be slightly squeezed, but it will gradually improve. I think that's what's important. Having said that, one of the things we will do is we are definitely clear that we will not deliver margins at the cost of cutting, A&P, because that, long term impacts brand equity. We will continue to invest behind A&P. If you notice, even the last 2 years, we have been investing behind A&P so that we get growth and diversification. So I think margins will come back, and we are not particularly perturbed. It's a very, very short-term phenomenon. As I said, that especially for copra, which is the biggest component of our cost structure, we are at the fag end of the inflation cycle.
Got it. One last question, Mr. Gupta. You've also mentioned that you're on track with respect to achieving double-digit growth in your international markets as well. I want to understand as to what share of total revenue is international markets right now, and going ahead, to what percentage will this go to, and then how much of a margin improvement do you expect, let's say 1 or 2 years down the line, by the end of FY26 or FY27?
We are an emerging market multinational, so we are very, very fortunate that our home market continues to be a high growth, high investment market. So unless there is some big ticket acquisition, I don't think international business contribution will be significantly higher, because we will continue to have double-digit revenue aspirations even in the India business. Having said that, the mix within the international business is slowly changing. We are aggressively reducing our dependence on Bangladesh. Having said that, Bangladesh continues to be resilient and deliver double-digit growth, but we are investing significantly, especially in Middle East and North Africa, where there is significant headroom for growth and market share, and some of the other new markets. And we'll continue to invest behind even Southeast Asia, where we see headroom for growth. So overall, I think international business, also the other thing which we have been doing is, we are far more present in some of the premium personal care categories like shampoo, shower gel, male grooming. So our portfolio is different. That also helps us in terms of reducing our dependence on commodity-led coconut oil.